Hey folks, Jeff Poling here with CCR Realtors along with Tim Sprague and Rex Whetstone with Amerifirst Home Mortgage, talking about a few different things that I think will be very, very informative to you. First off, Tim, we just want to talk a little bit about the different types of loans that are out there and some of the benefits that are available for folks.
Yeah, basically the four types of loans, Jeff, is, you got conventional, you have FHA, which is Federal Home Administration, you have VA, which is for military, and you also have the USD RD loan. Those are all four fixed rate loans, and we do offer four of those.
Now, as far as the differences between these different types of loans, conventional versus like a government loan, FHA and VA, what's the major differences?
Conventional has a little higher requirements as far as credit scores. The government loans are a little less forgiving, and of course, they all have different down payment requirements.
Also, with conventional, you have a little looser requirements on property condition, whereas FHA,
Correct.
VA, and USDA have certain standards they need to meet and parameters.
So in other words, they got to be a little bit more precise on the home.
Right, no broken
Correct.
windows, peeling paint, that kind of concept.
Okay, sounds good. The other area I wanted to talk about briefly is a lot of folks might be close on the credit score. They have a very good income. For whatever reason, they're not able to get things done.
Correct.
How are you guys able to help them out with things like that?
What we do here, Jeff, is a little different than most lenders. We will take the time and do credit counseling, for lack of a better word. We'll go through that credit report. We pull all three bureaus. We'll tell them what their credit scores are currently. We'll take a look at each account, say, hey, this is hurting you. This is what you need to do. This is what you don't need to do. And usually if we spend extra time, they appreciate that, and they will go out and take care of what they need to take care of in order to get eligible in the future.
All right, with the lower scores, we still can do some of those lower scores if they just have to have a little bit more down payment.
Okay. And finally, one of the big things that a lot of people are, you're seeing it everywhere in newspapers, TV, social media, interest rates are going up.
Yes.
Now, I'd like to kind of expound on that as far as with interest rates going up, how can it affect buyers as far as purchasing power, and also how can that affect sellers?
Well, yeah, I mean, the higher the rate, the higher the payment. So that means that's less you can borrow compared to rates that were previously. And as for the seller, that means your buyers are not going to be able to offer as much because their payments are going to be higher, and therefore less loan amounts.
So what that's doing is it's taking some of those buyers out of the market, and they're not
Right.
able to purchase that big of a house. Is
Yes,
that
they'll
correct?
have to take a little bit step back to more their price range for the rates at that time.
So I was looking at a little analysis here not too long ago,
Mhm.
and this was just between 4.5% and 5% interest rates on a $300,000 home. We're looking at about $48,000 difference over the life of a loan.
Yes.
Right.
Yes. Now, anything on mortgages that you can pay extra and cut that time off, you will save in the interest rate overall as well. So any additional payments makes a huge difference in the end.
Gotcha.
But if you're on the fence, might be the time to jump off and get moving.
Yeah, whether you're a seller or a buyer. Am I
Right.
hearing you correctly?
Yes. Yeah, it's really been vicious this last few months, and we don't know when it's going to stop.
I greatly appreciate your time, folks. Once again, Tim and Rex, we want to thank you for looking at this video and truly appreciate you and look forward to helping you.